Shopify Capital is a financing solution designed specifically for Shopify merchants to fund their business growth. It offers revenue-based lending, where repayments are made as a percentage of daily sales instead of fixed monthly payments. This flexibility adjusts payments according to your business performance. Unlike traditional loans, Shopify Capital requires no personal guarantees or credit checks, making it accessible for newer or smaller e-commerce businesses. The approval and offer amounts are generated by Shopify's AI, which analyzes your store sales data and trends but operates as a black box with no detailed transparency. Availability is currently limited to select countries and U.S. states, and offers are shown directly within your Shopify admin dashboard if you qualify. This loan is best suited for Shopify stores needing quick, flexible capital without traditional lending hurdles. Shopify uses advanced AI technology to assess your store's data, including sales velocity, product mix, and historical trends, to calculate your loan eligibility and offer. They also factor in macroeconomic conditions, such as inflation and interest rate trends. However, the exact weighting of these factors is proprietary and not publicly disclosed. Loan offers typically present multiple options with varied loan amounts and repayment percentages, giving merchants choice based on their comfort level with daily sales deductions and overall cost of capital. The amount offered can fluctuate daily based on your store's evolving performance metrics. If you use Shopify Payments, the data Shopify analyzes is more comprehensive, increasing the likelihood of receiving a loan offer. However, Shopify Capital also supports merchants using third-party payment gateways. The recommendations lean towards Shopify Payments for better insights. Shopify Capital repayment is uniquely tied to your revenue, meaning you repay a fixed percentage of your daily sales instead of a set monthly amount. This method aligns loan repayment with your cash flow, easing financial strain during low sales periods. There is no fixed loan duration, but Shopify prefers loans not be outstanding beyond 10 months, which impacts repayment calculations and overall cost. Faster repayment means the effective annual percentage rate, APR, increases, so consider your sales velocity carefully before borrowing. Once you reach 85% repayment on existing loan, Shopify allows you to apply for new funding without stacking additional repayment percentages on your sales, helping manage multiple loans separately. One major advantage of Shopify Capital is the absence of personal guarantees or credit checks, which lowers barriers for new or less established e-commerce sellers who might struggle with traditional bank loans. This funding stream separates personal and business finances. Application and approval are nearly instantaneous compared to banks, with funds deposited within 3 to 5 business days post-approval, enabling rapid cash flow responsiveness. This speed can be critical when facing inventory needs, marketing campaigns, or other growth opportunities. Flexible repayment tied to sales reduces the risk of default during slow months, promoting sustainable loan servicing. Additionally, Shopify's continuous data analysis can adjust loan offers as your business grows, making it a scalable funding solution. Shopify Capital is frequently used to purchase inventory ahead of peak seasons or when suppliers offer bulk discounts, ensuring merchants never miss sales due to stockouts. It is an efficient way to smooth out seasonal fluctuations without tying up existing capital. Many Shopify merchants also use the loan proceeds to boost marketing efforts, from running paid ads to investing in product packaging redesign. The added funds allow merchants to experiment with campaigns that would be impossible without upfront cash. Managing cash flow is a crucial challenge for small businesses, and Shopify Capital provides a flexible source of working capital that eliminates rigid monthly repayments. This flexibility helps businesses stay agile, covering operational costs or reinvesting in growth without traditional loan stress. Shopify Capital loans typically have APRs ranging from about 9% to 15%, depending on loan size and repayment term assumptions. While this is higher than Small Business Administration, SBA, loans which may offer 7% to 9% rates, Shopify Capital fees compensate for the lack of credit checks and faster access. Because the repayment period is linked to sales performance, the actual cost may be higher if repaid more quickly due to strong sales velocity. Merchants should carefully analyze offers and use loans for investments that generate positive returns exceeding loan costs. Lines of credit from other lenders may have variable costs, but Shopify Capital's predictable percentage of sales repayment model offers transparent cash flow impact, albeit often at a higher cost relative to traditional bank loans or SBA financing. Eligibility for Shopify Capital requires operating a Shopify store that meets specific revenue benchmarks Shopify deems viable, though exact thresholds aren't public. Merchants using Shopify payments have better chances due to richer data access. Currently, Shopify Capital is available to merchants in Canada, the UK, and select US states, approximately 14 states reported. It is not universally available in the US, and Shopify does not publicly list eligible states, requiring merchants to check their dashboard for offers. Non-eligibility does not necessarily reflect poor credit or performance, but may result from Shopify's opaque lending criteria. Newer or lower volume stores may initially be excluded, but can qualify as the business grows and accumulates more sales data. Loan offers appear automatically on qualifying merchants' Shopify admin homepages, showing multiple loan amounts with associated daily repayment percentages and total payback amounts. Merchants select an option and formally request the loan through the portal. After submission, Shopify performs a final review before fund disbursement, typically within 3 to 5 business days. This secondary review may include fraud checks or further data validation, but remains largely automated. Merchants can track their repayment progress in the dashboard. Once they repay 85% of an active loan, they become eligible for subsequent funding rounds without overlapping repayment percentages, allowing staged capital injections aligned with business growth phases. Shopify Capital loans, while easy to obtain, come at a higher cost compared to traditional financing sources. This makes them less ideal for routine working capital needs and better suited for strategic growth investments that yield returns above the loan costs. Because repayment is a fixed percentage of daily sales, a downturn in revenue slows repayments but also prolongs the loan term, potentially increasing total cost. Conversely, rapid sales growth can lead to faster repayment with a higher effective APR. Merchants should carefully review loan offers, assess their ability to generate return on investment from the loan funds, and consider alternative financing options, especially if they have access to lower-cost credit, to avoid overburdening their business financially. Shopify Capital is best utilized for high-impact, short-term financing needs like purchasing inventory prior to peak seasons or scaling marketing campaigns with measurable return on ad spend. It should not be relied upon as a primary, long-term financing solution due to cost. Businesses that lack traditional collateral or have credit constraints can benefit greatly from this streamlined, quick-access loan product, providing they use funds judiciously and monitor their cash flow closely. Overall, Shopify Capital fills an important gap for e-commerce sellers needing flexible, revenue-based financing inside the Shopify ecosystem, enabling growth without personal risk but at a premium price that requires strategic planning.